Hey everyone, welcome back to Corporate Decoder. Today Comcast Corporation filed an 8K, and I am seeing a clear message about shareholder priorities. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just held its annual meeting, and the results reveal a significant divide in what shareholders want. This report details what happened at Comcast Corporation's annual meeting on the 10th of June, 2026. Now, Comcast Corporation, you know them as the giant media and tech company, filed this report to tell everyone how their shareholders voted on a few key things. First off, let's look at the stock. Their class of common stock, traded under the ticker CMCSA, is listed on the NASDAQ. They also have various notes that are publicly traded, like their 0.000% notes due in 2026, which trade as CMC's 26, and others like the 5.50% notes due 2029. Trading as CCGBP 29 on the New York Stock Exchange. The main event here is how the shareholders voted. They voted on the directors, and it looks like all the nominees for the board of directors were elected. For example, Kenneth J. Bacon received over 299 million votes in favor, while 73 million were withheld. Most of the directors saw a similar pattern with a significant number of votes in favor, but also a notable number of withheld votes. This isn't unusual, but the scale of withheld votes can sometimes signal underlying shareholder concerns. Next, the shareholders voted on appointing Deloitte and Touch LLP as their independent auditors for the year 2026. This passed with a huge majority, with almost 380 million votes in favour and only about 14.5 million against. This shows a strong consensus on having a trusted auditor. Now, things get more interesting when we look at the executive compensation. Shareholders approved this advisory vote, but it was closer than you might expect. We saw over 217 million votes in favour, but nearly 154.5 million votes against. This say-on-pay vote, while technically approved, shows a significant portion of shareholders are not entirely happy with how the executives are being compensated. This is a common theme we see where companies approve executive pay, but there is always a vocal group of shareholders expressing their dissent through their votes, and this is a large dissent. But here is the real conflict. A shareholder proposal to have an independent chair was not approved. This is where the division really shows. Only about 97.9 million votes were in favour of an independent chair, while a massive 272.9 million votes were against it. This tells us that the current leadership, or at least the majority of shareholders, prefer to keep the current structure where the chair might not be independent. This proposal, even though it failed, highlights a desire among some shareholders for more independent oversight at the very top of the company. Think about it like this: the company is basically saying, thanks for the suggestion, but we're going to keep things as they are. This is a pretty strong signal from the majority against increasing independent oversight at the highest level. The filing also includes the standard cover page information for the interactive data file. This report was signed by Elizabeth Weidman, Senior Vice President, Senior Deputy General Counsel, and Assistant Secretary on the 12th of June, 2026. Looking at the bigger picture, Comcast annual meeting reveals a company where financial operations and auditor appointments are met with broad approval. However, the close vote on executive compensation and the decisive rejection of an independent chair proposal suggest a split in shareholder opinion regarding governance and executive rewards. While the company is moving forward with its current leadership structure, the significant number of dissenting votes on executive pay and the outright rejection of an independent chair proposal are signals that a segment of their shareholders are pushing for greater accountability and a different approach to leadership oversight. The company's decision to stick with its current structure, particularly on the independent chair issue, will be something to watch as it could impact future investor relations and governance discussions. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like this video, comment below, subscribe, and join our Discord.